Hello friends, till the last video we have covered all the topics which are having a tick mark. Our recent completion was how to prompt for analyzing the 10-year P&L or the profit and loss statement. Now in this and the subsequent few videos we will see how to analyze the 10 years balance sheet using prompts. So this will be the focus for this and the coming few videos, through which we will learn how to prompt for creating a common size balance sheet ratio analysis, and how to get inferences from balance sheet both in parts and full. We saw in the last video on P&L what is the approach. We will do that approach here as well. So now going to the screener where you have picked up the company as ITC for this example. It's only an example for demonstrating prompting, nothing about the stock, nothing about buy, sell or hold. Please use this only for academic purposes. Don't stick on to the name. It is just to see or show you the approach. So as you scroll down, you find the balance sheet somewhere here. So you have the year on year balance sheet. One important thing to notice, you have the different breakup. If you click on the plus sign, you get what are the details of the different borrowings. Similarly, if I click on other liabilities, you get what are the different liabilities. Fixed assets. So the list goes on. But one challenge here is such a big list capturing as an image is first challenge. And the model also struggles. I have tried it. Model also struggles to infer the numbers. So you need to decide at what level I want to stop or to what level I have to get down to. In terms of borrowings, there are long short borrowings, other liabilities, what are the trade payables. There are different subcategories. So now what I do is other assets I definitely want to break up because there are inventories, trade receivable, cash equivalents, loans, etc. So other assets I want to break up. Whereas when it comes to fixed assets, I have decided not to break it up just to make my life simpler, because this is a 10-year statement analysis, which is a very preliminary analysis. This I'm not going to do a deep dive analysis. So this is the kind of simplicity which I'm going to run this prompt, capture the image and run this prompt. So you can reduce the what to say font size in Chrome so that you can capture the full image. You'll be capturing from March up to March 2024. September is only half the year over, so you will be capturing only up to here. Okay. So now let me go to Chat GPT, upload the model, 10 years balance sheet. This is a new chat to analyze 10 years balance sheet. I am not going to mention which company it is. Let it be generic. Please create a common size balance sheet. For analysis. Show two analysis with a year in the column and financial ratios or financial description in the rows. So let us see what the output comes. In the meanwhile, so what is the common size balance sheet is now. If I have this 10-year comparison, March 2013 we have 790 crores as equity capital, whereas March 2024 we have 1248 crores. The numbers aren't the same, so it's very difficult to compare, like whether the inventory here 7500 crores is in the overall assets lesser or higher when compared to 14,000 crores in 2024. Just to make that comparison simple, this entire balance sheet will be converted on a 100 points basis or a percentage basis using total assets or total liabilities at the denominator. So this is exactly what the tool is trying to do there. Let us see the output now. Okay, so it has done that. It is doing it right now. It is doing it. Okay, fine. So let me capture this in a PowerPoint or Excel to make few quick validations. I'm not going to deep dive. I'm going to make a few quick validations. So it has made a common size balance sheet. So I'll paste it here. Which one is the thing? Total fixed assets, equity capital, borrowings, other liabilities, fixed assets. Okay, let me try one thing. Split the assets and liabilities in separate tables. Cool. So now I get liabilities first, then I should get assets. Yeah. So this will be better for comparison purpose. So this you can do it as a chain of prompt, like you prompt once, review the output, you give another prompt to change the output or get the desired output. So this is the liabilities, whereas this is the assets. Okay, I'm just going to do one foolproof checking. Okay, so reserves. I'm just going to see whether the 63.34% is correct. So I go to screener. Reserves is 22,368, whereas the total liabilities is 35,329. So I pull out a calculator. 22,368 divided by 35,329 is equal to into percentage. So it comes 63.31. So let us check this. Yeah, it shows 63.34. 63.34. So closely matching. If you want, you can extend the checks for a few more rows as well. But in the interest of time for this video, I just stop with this. Okay. So now in this common size balance sheet, you can see what is the year-on-year difference. Like reserves has been consistently growing now. Earlier it was 60%. Now it is close to 80%. Borrowings is minuscule. It's just 0.3%. Other liabilities, maybe to tax department or whatever other liabilities, we have not broken it down, so it is less than 20%. That is the way I quickly infer this total assets um, this thing common size balance sheet. And when I come to total liability, sorry, when I come to total assets, the fixed assets contribute to close to 30%, work in progress 2%, investments close to one third of their total assets is in investments, be it cash or whatever. If you want more details, you can quickly see where are the total investments. I don't think they have given a breakdown of the total investments. Inventories, no, it's not there. Total investments, we don't have a breakdown. So almost one third of the total assets is investment. So this is the way you'll be quickly interpreting or inferring from the common size balance sheet. So we can still even continue this prompting, saying give key inferences from both the tables, key inferences both the key inferences from both the tables, that is common size assets, common size assets and liabilities. Give key inference from both the tables. So it is going to tell what is more, what is less, what is not going good, all that. Okay. So liability analysis, it says they are using minimum debt. We saw, right? It was less than 0.3% or something. Then there's a declining trend of long-term and short-term borrowing. Fine. Capital structure is very stable. Then asset analysis. Fixed assets have declined. Then investments have increased over a last 10 years period. Investments has increased sharply. So it has a lot of cash to for any organic or inorganic growth. So these are the way that you can just image. I just gave an image, then a few prompts, and you can see where I have landed. I have the common balance sheet in my hand ready. Okay. And also the inferences from this common size balance sheet. So this is one use case for prompting using GenAI for 10 years balance sheet. We will refer or we will check the other two use cases in the next video, how to do the balance sheet ratio analysis. Till then, bye friends.